Here is a number that might shock you. 78% of Americans leave thousands of dollars on the table every tax season. I am talking about your money, sitting in the government's pocket instead of yours. Stay with me until the end, because the last strategy I'm going to share is something that most certified public accountants don't talk about it, and it's completely legal. Let me tell you about Mark, who learned this the hard way. Like many of you, he was doing his taxes the same way every year, taking the standard deduction, inputting his W-2, and hoping for the best. He was getting around $500 back and thought that was normal, until he discovered his colleague, making the same salary, got a refund of over $4,000. The standard deduction is changing, and there are new credits and deductions that almost nobody is talking about. Most people are still using outdated tax strategies, completely unaware that the rules of the game have changed. They're missing out on new home office deductions, enhanced investment write-offs, and expanded education credits that could put thousands back in their pockets. Think about it. The average American overpays by $2,800 in taxes every year. And once you file your taxes, you can go back and claim these benefits retroactively. You need to know these strategies now. So what exactly are these 7 strategies that could transform your tax refund in 2025? Let me give you a quick overview, and then we'll dive deep into each one. First, we have the hidden home office revolution, and trust me, it's not what you think. Even if you are only working from home part-time, this new rule could triple your deductions. Next is the investment tax shield, a powerful strategy that helps you protect your market gains in ways most investors never consider. Third, we'll explore the retirement account maximizer, because the contribution limits are changing in 2025. And here is a little known loophole that could let you put away way more than the standard limits. Fourth is the business owner's secret weapon, and yes, this applies even if you just have a side hustle. The fifth and sixth strategies, the education credits revolution and real estate tax hacks, both completely reimagined for 2025. And finally, I'll show you the ultimate tax credit stack, my personal favorite because it shows you how to combine everything we've discussed into one powerful tax saving strategy. But here is the key. These strategies work best when you understand how to implement them correctly. So let's start with strategy number 1, the hidden home office revolution. Here is what's new. The IRS has completely overhauled how they calculate home office deductions. Instead of the old square footage method, they've introduced what I call the hybrid work multiplier. If you work from home, even just 2 days a week, you can now claim up to 40% more in deductions than you could in previous years. The real power comes from what you can include, like your internet bill, utilities, phone expenses, and even a portion of your security system. But here is the crucial part. You need to start documenting everything now. Start to track these expenses, take photos of your home office setup, and keep all your receipts digitally. Trust me, this 5-minute organization task could save you thousands come tax time. But here is one common mistake I see people make. They forget about the new technology allowance. Under the 2025 rules, you can claim additional deductions for any technology that enables your remote work. That means your laptop, monitor, desk, chair, and even your noise-canceling headphones could be partially or fully deductible. Now let's talk about protecting your investment gains with strategy number 2, the investment tax shield. And with the market's recent volatility, this couldn't come at a better time. Here is what most people don't realize about the 2025 tax changes. The government has actually given us more flexibility in how we handle investment losses and gains. Remember how tax loss harvesting used to have that annoying 30-day wash sale rule? Well, they've modified it in a way that could be a game changer for your portfolio. Let me show you exactly how this works with real numbers. Say you bought some tech stocks that are down $3,000, but your index funds are up $5,000. Under the old rules, you'd be stuck paying taxes on that $2,000 difference. But with the new flexible harvesting provision, you can strategically realize those losses while maintaining your market position, potentially saving you thousands in taxes. The new rules allow for what I call micro-harvesting. Instead of waiting for big losses, you can now harvest smaller losses throughout the year, as low as $500. When you combine this with the new holding period adjustments, you could reduce your taxable investment income by up to 40%. The key is timing. You need to review your portfolio quarterly, not just at year-end. And here is a pro tip. Set calendar reminders for the last week of each quarter. This structured approach to tax management pairs perfectly with our next strategy about maximizing retirement accounts, which could save you even more. Let's explore now strategy number 3, the retirement account maximizer. Here is what's changed. The IRS has introduced what I call the catch-up multiplier. If you are under 50, you can now contribute up to $23,000 to your 401k, but that's just the beginning. The real magic happens when you understand how to stack different retirement accounts together under the new rules that allow for what I call cross-account optimization. This means you can now make contributions to multiple retirement accounts in a way that wasn't possible before. The key is understanding the order of operations. You need to structure your contributions in a specific sequence to maximize the tax benefit. And here is a pro tip. The last quarter of 2024 is crucial for setting this up correctly. This strategy alone could reduce your taxable income by thousands, but it works even better when combined with our next strategy for business owners. Let's get to strategy number 5. The education credits revolution. Here is the breakthrough. The IRS has expanded their definition of qualified education expenses to include online courses, professional certifications, and even certain types of skills training. Let me show you how powerful this is. Lisa took $2,000 worth of online marketing courses last year. Under the old rules, she couldn't deduct any of it. But with the new continuous learning credit, she was able to claim 50% of these expenses, plus get an additional credit for the software she needed to complete the courses. The best part? This isn't just for career-related education. The new rules include what they call life skill enhancement courses. Financial literacy programs, language learning software, and even certain types of coaching programs might qualify. But you need to keep very specific records for these expenses to qualify. Now for strategy number 6, real estate tax hacks. The 2025 tax code has some surprising benefits that might influence your next housing decision. Here's what's revolutionary about the new rules. For the first time ever, renters can claim what's called a housing stability credit. Think of it like the homeowner's mortgage interest deduction, but for responsible renters. If you've maintained a lease for over 6 months and your rent payments are on time, you might qualify for a credit of up to $1,800. For homeowners, the game has changed even more dramatically. The new property improvement deduction allows you to write off certain home upgrades that improve energy efficiency or create home office spaces. And these deductions stack with the home office benefits we discussed earlier. But here is what most people miss. You need to structure your improvements and document your expenses in a specific way to maximize the benefits. And now for the strategy you've been waiting for, the ultimate tax credit stack. This is the crown jewel of tax planning for 2025, and it's all about combining everything we've discussed in a way that maximizes your refund. Let me show you how this works with real numbers. If you are working from home part-time strategy 1, investing wisely strategy 2, maximizing retirement account strategy 3, and running a side hustle strategy 4, you've already built a strong foundation. But here is where the magic happens. By timing these activities correctly and documenting them properly, you can potentially double their impact. For example, if you are taking online courses for your side business strategy 5 while making home improvements for your office strategy 6, these expenses can now compound in your favor. The key is understanding the sequence. You need to implement these strategies in a specific order. Here is the thing. The knowledge you've gained today isn't just information, it's financial power. And I want you to really think about what you could do with an extra $5,000 or even $10,000 in your tax refund. Let me be crystal clear. What I've shared with you today isn't some get-rich-quick scheme. These are legitimate IRS-approved strategies that most Americans simply don't know about. And with the massive tax changes coming in 2025, there has never been a better time to get this right, but you need to act now before these opportunities slip away. Here is what I want you to do right now. First, smash that like button if you found this information valuable. It helps more people discover these game-changing strategies. Remember, the difference between getting a mediocre tax refund and one that could change your life often comes down to knowledge and preparation. You now have the knowledge. All that's left is to take action. See you in the next video, where we'll unlock even more strategies to help you keep more of your hard-earned money.